Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
11,376, 375 thereabouts. So that's about 20 points higher now, 25 higher.
PVR is the new Maruti. Now Maruti has stumbled, but I think it's chance for PVR to now keep going for the next couple of years.
The first time the rupees ever hit 70 against the dollar.
The market still with about a 50-odd point gain on the Nifty, and it all looks pretty steady at this point in time.
Market is looking good. So the Nifty is heading closer to that 11,450 odd mark, and the Sensex is up about 275 odd points.
DHFL's numbers have been very well received, 5.5% up on DHFL. There was some buying on a couple of the mid-cap IT names like NIIT Tech, even Emphasis, the stock we discussed. That's ICICI Securities pick. That was up about 2%.
Dalal Street reverses yesterday's losses. The Nifty is back above the 11,400 mark, while the Sensex gains over 200 points. Reliance and ICICI Bank are the top index gainers.
The rupee recovers after breaching the 70 to the dollar mark for the first time. Other emerging market currencies, including Turkish lira, also reversed their losses against the dollar.
Banking and financial stocks lead the rally. The Nifty Bank Index closes with gains of about 1%. Retail inflation dips in July. ICICI Bank, Axis Bank gain along with Bajaj Twins and Dewan Housing.
JSW Steel outbids other contenders for Bhushan Power and Steel, offers 19,700 crore rupees for the debt-laden firm. Tata Steel sticks to its original bid, and Liberty House also keeps its offer unchanged. That's an exclusive.
Sun Pharma reports a higher than expected first quarter. The stock jumps over 7%. Net profit comes in close to a full 1,000 crores. Well, those were the top 5 stories from Dalal Street, which kind of defined the day. Hello and welcome to a fresh new edition of Markets Today Talk Back. This is the show where we wrap up all which went on during those hours of trading in just 5 headlines. So I'm Prashant Nair. With me today is my colleague Ekta Batra. Hi, Ekta.
Hi, Prashant. Absolutely. Well, over the next 30 minutes, we will talk about those top 5 stories, and our guests will answer all of your stock queries as well. Joining us now to answer all of those questions is market expert Sanjeev Bhasin of IIFL and technical expert Mitesh Thakkar. Thanks, gentlemen, for joining in. But before we get talking about all of what took place in the markets, well, Prashant, turned out to be a good session.
Turned out to be a good session, and it looked like in the morning that it's going to be a better session, a much better session as compared to yesterday. And it's quite a contrast, isn't it? Yesterday, when we were left off, I mean, things were all essentially, especially emerging market currencies were all over the place. There were big cuts, etc. But this morning, there was a modicum of calm. I mean, you looked at lira, you looked at the euro, you looked at what the yen was doing. I mean, and of course, equity futures, etc. There was some calm, and it looked like it would be a decent start, and that's exactly what we got. Asia, by the end of it, lost some of the gains. Nikkei, for example, was still the big market. Actually, was the best performing as well. Was up about 2% or so. Chinese indices were lower. Taiwan was higher. Hang Seng was higher. India also was amongst. After Japan, India was, I guess, sort of neck and neck for the second spot. 0.75% gain amongst the best markets there. Gains, though, as far as the market, the Indian market today go, are pretty, seem concentrated. It's not as if the Nifty was up, 0.75% or so, and the mid-cap and small-cap indices were flat, or the Bank Nifty was flat. They also were higher. But if you just look at the overall market breadth, the overall advance decline, it's almost evenly matched. I mean, there are equal number of advances to stocks which fell. So it looks like within indices and the broader market, gains were pretty concentrated. The rupee, that was the big story, at least in the first half. It hit the 70-odd mark. Never done that before. Talk of RBI intervention in the market. There was some... as soon as the news broke, the rupee sort of recovered quite swiftly. But then later we noticed that the dollar itself has been in retreat across various currency crosses. Now the view is that nothing has really changed in terms of perception about the lira or anything of that sort. This could just be pure profit taking that we are seeing. So the dollar still remains strong. The trend is higher. But for now, we are seeing some retreat, which is giving reprieve for emerging market currencies, which is where most of the pain and turmoil really has been. But in terms of stocks, Ekta.
Yes, absolutely. Well, you mentioned the rupee, which was really top of mind and the top story today. So we had a lot of these pharmaceutical stocks which reacted to a depreciating rupee positively. But to add to that, Sun Pharma reacted to what was a good set of numbers. So that stock was the top gain on the Nifty. Infosys also just about gave up all of its gains intraday and ended flat at 1400 rupees. Techem also up around 2%. But a lot of the financials did well as well. So Yes Bank, ICICI Bank, Bajaj Finance, Finserv, all of these stocks gained. Reliance Industries was in the green, and on the losing side it was UPL, Adani Ports, BPCL, HPCL again from the oil marketing space, impacted because of a depreciating rupee. So those stocks lost out a little bit as well. In terms of the broader markets, result reactions dominated there. So Cadila Health down 4%, Allahabad down weak, down 6.5%. IDBI Bank, which reported what was a dismal asset quality. Idea Cellular, which was weak as well, and something like a Jet Airways, which lost out a little more in today's trade and has been in the past couple of trading sessions. Apollo Hospital, which managed to gain for the second day straight. Adani Enterprises, which was buzzing. Something like a Page Industry already elevated, so buying at higher levels. But let's find out from our guests what they made of the markets today. Sanjeev, over to you then. What's your sense in terms of the overall performance for the markets and the resilience compared to the rupee at 70?
Yeah, hi. So it's just telling you that in equities, India is a standout market, and for once we are outbeating all indices globally. Yes, there is the conventional wall of worry, and the rupee has been part of the Turkish lira and the strength of the dollar. But if you measure the rupee against a basket of other currencies, we've been an outperformer. And now with macros gaining strength on a week to week, on a quarter to quarter basis, we see no let up. So we think equities is in a very sweet spot, and we think going forward it will continue. So the only caveat here is that we have elections in the next 6 to 9 months, which could be a little bit an obstacle, but I think Indian equities are set to outperform in the near future.
Okay, Mitesh, what would your sense be?
Evening, Prashant. I think, what was the most important thing was that yesterday we had kind of gapped down on negative news, and today I think, we kind of filled that gap on the Nifty. So I think that's a very positive thing. I think eventually this should lead to higher levels than 11,500 being crossed. Broadly, I think, this filling up of the gap immediately the day after it was created suggests that the buying clearly waits at lower levels. So I think this market does suggest not only it will go up, but I think any dips should, for the timing, be used to buy into it.
Okay. Well, let's get to the second headline now. The big news today from the currency market. The rupee fell to a new all-time low, breaching the 70 mark to the dollar for the first time ever. The fall is in line with other emerging market currencies that have become casualties to the lira crisis or the currency crisis in Turkey. But the Indian currency is among the worst performing emerging market currencies, having slipped 9% so far this year. Lata Venkatesh is here to decode the rupee's movement for us. Lata.
Well, first of all, the big news is that the fear of 70 is over and done with. The dollar cost 70 rupees at some point in time, and then there was some recovery in the rupee and the dollar became cheaper. Now, okay, the fall started really yesterday. The Turkish lira, as it sunk, it was very obvious that a lot of European banks are exposed to it. The euro fell. When the euro fell, the dollar rose. And because of the rise in the dollar, other currencies had to arithmetically adjust to the stronger dollar. They became weak. And also there was this general fear of emerging markets. If Turkey went down, other current account deficit countries could hurt. And therefore, there was this fear psychosis about countries like India and Indonesia, which have current account deficit. But the important part is the technical part. There is a dollar traded, the rupee is traded offshore as well. And the onshore rupee dollar was much stronger than the offshore dollar. And that's why it made sense to sell the dollar here and buy it in the offshore market. And when the Reserve Bank saw that, it just refused to come in the way. Anyway, there is mania across, or rather fear psychosis across EMs. Why should we make it cheaper for the speculators? So it didn't stand in the way till the onshore-offshore rupee got corrected. And that's why you saw that huge 1.4% fall in one day. The Reserve Bank refused to intervene. A lot of options were written around that 70 rupee mark. But today, actually, the rupee started slightly stronger. The dollar was cheaper by about 5-10 pies in the morning. But again, you saw the dollar strengthening, the DXY, dollar index strengthening. You saw the yuan weakening. And once again, the rupee fell. 70 was an important psychological barrier to cross. My sense is the Reserve Bank allowed it to be crossed and intervened only at 70.10. And thereafter, once again, people saw the Reserve Bank and rolled back all their short rupee positions. And basically, thereafter, it was more orderly trading, ranged trading. Now, the point is, hereafter, I think the depreciation will be more gradual. The big question for the market is that year to date, from April to June, the Reserve Bank spent $25 billion not allowing the rupee to depreciate. It kept it around that 69 mark, 69.10. But in one day, it allowed a 1.4%. Why did it allow that? What changed for the Reserve Bank? Probably it was the fact that globally as well, EMs are going to find life difficult, and therefore they allowed this one-time change. We don't know, but that is really the puzzle for the market. But hereafter, my sense is the depreciation will be more orderly.
Okay, all right, Lata. Well, thanks very much for that. We also caught up with the former RBI Governor Bimal Jalan and JP Morgan Sajid Chinoy on what this means for the economy. Here's what they had to say.
In terms of real effective exchange rate, taking into account our inflation rate, plus the movement in exchange rate, and what's happening in terms of the trade deficit. I mean, it's not, there's nothing to be scared about, at the moment. I mean, it's under control, and our foreign exchange reserves are also very high. So we can manage it as and when we feel like. If you look at the total picture, we have, so far as reserves are concerned, we have high reserves in terms of the exchange rate movement, and even now, in terms of real effective exchange rate, it's not too low, and there is nothing to worry about.
Okay, by the way, that was the former Governor Bimal Jalan talking about the rupee, saying nothing to worry. This is broadly a very slow depreciation that we've seen and somewhat warranted. The third story, the third headline of the day, banking and financial stocks led the way for the markets. The bank index, for example, was up close to 1%. Retail inflation hit a 9-month low of 4.17% in July. We got those numbers yesterday evening. Amongst banks, the gains were led by the private sector. Names ICICI Bank, Axis Bank and Yes Bank were the top gainers. The interest rate sensitives like, for example, in the NBFC space, Bajaj Twins, Finserv and Finance, Dewan Housing, Indiabulls Housing Finance also got a leg up in trade today. I think we have a question coming in on ICICI Bank. Ravi Singh from Uttarakhand has written in with a query on ICICI Bank. He's been holding 145 shares of ICICI Bank. His purchase price is 270 rupees. Been holding the shares for the last 3 years. Wants to know if he should hold or sell. ICICI Bank is past 300 now, 330 or so. Let's take this to Sanjeev. Sanjeev, what would you recommend?
Well, I would say stay put. The bank has just turned around, and we think the change of guard at the helm will now see a lot of uncertainty over, and we think corporate banks are in the best space they've been. ICICI is certainly leading from the front, and for once it has gained the traction of being a leader. We think if the Nifty has to go to 12,000, which will be our target by end of this year, then definitely 400 plus could be on the cards on ICICI. Stay put. I think corporate banks have just turned around, and as the private capex expands, we think credit expansion will be very, very strong for the corporate banks.
Okay, well, we have another query now. Om Prakash from Delhi has written to us with a question on Bajaj Finserv. He's been holding 50 shares of the company, 4,400 rupees for the last 2 months. Wants to know if he should hold or sell. Mitesh?
Yeah, so there's no reason to sell for timing, at least on the charts. It's continuously making new highs. Looks like overbought, but then again, stocks can be overbought for quite some time to come by. I think a good strategy here would be to trail your stop loss, which now would come at about 6340, 6350 zones. And hopefully, I think, we might see 8,000 happening over here.
Tuned into markets today. Talk back. Well, we have Sanjeev Hasin and Mitesh Thakkar who are with us to decode the day and answer all of your questions. Well, we are through 3 headlines, so let's get to the 4th top story that we're tracking today. JSW Steel ended the day in the red after it increased its bid for Bhushan Power. Street appeared concerned about the revised offer, fearing that very aggressive bidding may in fact cause books to be over-leveraged. Meanwhile, Tata Steel gained almost 2% after reports emerged that it had refrained from hiking its offer. Remember, the final bids for debt-ridden Bhushan Power were opened by the Committee of Creditors today. Ritu Singh has been tracking this story. She joins in with details. Ritu, over to you.
You know, it's a surprising turn of events. Tata Steel was the clear favourite in the first round of bids, but subsequently in the second round, we understand from sources that JSW Steel has emerged as the highest bidder by increasing its bid, as of yesterday to 19,700 crore rupees. Now, this trumps Liberty House's bid of 18,500 crore rupees and Tata Steel's bid of about 17,000 crore rupees as payment to lenders. It's a very surprising turn of events. In fact, these bids were opened by the Committee of Creditors in their meeting held today. But of course, H1 is yet to be declared because the committee will now place the details of all the three bidders before the NCLAT before its hearing on the 17th of August. Do remember, many people aware of the development told us that Liberty House has not been able to show a clear source of funds, and therefore their bid was not really being considered. It was always a game between the Tatas and the Jindals, and Jindals, we understand, have been able to secure a line of funding from State Bank of India, so they do stand a very good chance. We reached out to all of these three players for their comments on the story, but they all got back with no comments.
All right, Ritu, thanks very much for that. So, the stock in focus really is Tata Steel from a market standpoint, because the fear was that there would be a bidding war. Now, as Ritu pointed out, the fact is that Tata Steel has not changed its bid, which means it doesn't want to budge higher, which means that probably this was the last round. We've got a question on Tata Steel. Arivu T from Tamil Nadu has written in with a question on the stock. He wants to know the right time to buy 500 shares of Tata Steel for the short term. The 24th of last month, Tata Steel was at almost 500 rupees. It's at about 578 today. Let's take it to both Mitesh and Sanjeev. Mitesh, what would you tell him? Right time to buy Tata Steel?
I would say so, Prashant. I think, while we can, in hindsight, look back and see the prices, but I don't think we had any clue that the bottom will be formed over there. But now it seems like some stability is coming. I think a lot of indicators have turned their direction. So I think now to about 550, I think would be a good accumulation zone if he wants to look at about 3 to 6 months kind of perspective.
Sanjeev, what would your sense be?
Well, Prashant, we think the numbers were very, very positive, and the only caveat here was the Bhushan Steel buyout, which made the interest burden go up. But we think globally we are set for a very, very strong materials rally, and we think steel is going to be part of that, and commodities can lead from the front. So for us, it will be Tata Steel, JSW, and SAIL, and we think you definitely should start to buy from here on all declines. We think you could get a 20 to 25% upside in 2019 in Tata Steel.
Okay, Sanjeev, thanks very much. So that is Tata Steel. We come to the stock of the day, Sun Pharma, which essentially reported a good set of numbers, higher than expected set of numbers for the first quarter. The stock was up at 600 odd rupees by close. Net profits came in at about 983 odd crores as compared to expectations, which were a lot lower. There was, of course, a loss which the company had reported same quarter last year. Revenue, EBITDA margins, EBITDA and margins all beat street expectations as well. But we have Ekta right here in the studios to decode the numbers. Ekta, what was the real surprise with the numbers?
A top-down beat is what the surprise was, because the revenue was up around 16% came in higher than what our estimates were, or what the range was also for the company this time round. Margins came in at 22% versus expectations of 21-22%, so they delivered there. And the net profit also higher than estimates at 982 odd crores. In terms of geographies, all of the geographies performed. India was up 22%. US was up 8%, emerging markets was up around 16%, API sales were up 28%, rest of the world, which is 10% of sales, was down around 7%. So overall, good amount of growth coming in from major markets such as US and India, and US grew despite a sluggish set of numbers from Taro, which was down 4% this year. So that was actually a positive piece of data which came in from the US markets. Overall, the company is also launching or looking to launch Illumnia and another specialty drug in coming quarters. Plus, they're waiting approval for Zelpros and Ellipsia, which they filed from the Halol facility. And they are, the commentary would be most important for Sun Pharma in terms of what the guidance would be going forward, as well as what the outlook would be for the US markets.
Okay, so that is Sun for you. and the market sort of gave a big thumbs up to those numbers. We've got a question. Abhijit P from Bihar is writing in with a question on Sun Pharma. He's been holding 300 shares of the company. His cost price is 690 rupees. I mean, the stock crossed 600 today. He's a long-term investor and wants to know if he should hold or sell. 300 shares at 690 rupees. Sanjeev, Sun Pharma, your sense?
Yeah, so, the stock has been very, very volatile, and it has been in a low bend for the last, I think, 1.5 years. We've had a positive view on pharma as a whole, and we think the halol clearance will be the next kicker. So you can factor in the next few quarters, almost $150 million worth of order flows, which halol will start to unfold. And we think that the margins for this quarter were standout. So we have a very positive weightage on pharma. We think that will be a better proxy on the weak rupee rather than IT. And I would say 750 is on the cards in 2019. However, since you've held so long, I would say use any advance towards 730, 740, lighten up your position and try and get into another sector, because this pain or this outperformance will take about a year.
Okay, Mitesh, what's your sense? 600 for Sun now?
Yeah, I think today we were discussing the stock during market hours, and I suggested that the stock is now showing signals of reversal on the longer term charts. I think my basic target is around 700 over here, which kind of matches with Sanjeev's optimism on this stock. And I think even that beyond 780, 800 could happen if you give it about 12 to 15 months kind of time frame. So definitely hold. In fact, even he can add more to get his average price